Lori, let me start by telling you, if you're a developer in Southern California, I think California will be like back in the 80s. In the 80s when the internet started to boom and Apple started and Microsoft grew and all that great stuff, it was an unbelievable ride. Okay, prices went from 150,000 to 450,000 by the end of the decade. It was just unbelievable, doubled and doubled again. All right. And that may be happening again in the next 4 years here. Why AI and robotics is moving so fast that you could be actually programming something and it took you 12 days and you look and you find Google made up something even better. You go and you say, okay, let me not resist the change, let me embrace it and work with it, and you do something. I mean, there are daily updates now on YouTube and many channels that tell you today, we need to tell you that yesterday they just launched this. It is so fast. It is changing the world. So you need to set up a real estate fund. If your fund sources have dried up, I will give you the ultimate structure to raise money. We just set up 3 people this year, one after the other from July to now, that used to do what you do in Southern California, in Northern California, and it's a bonanza what's going on and what's going to happen. All right? Because all these changes, what happened? COVID 2020, let's just give you a little synopsis here. COVID 2020, everything stopped. 2021, market came back with a vengeance. Tourism was very high. I sold properties I never thought I was going to sell. Multiple offers. Boom. 2021 made us real, made us confused. 2022, the highest and most frequent interest rate increases in the history of this country. Okay, 11 increases in 12 months. It just devastated the market. In 2023, we were flat. And 2024, by July, market started going down and frozen in many parts of the country. And 2025 is no better. And if you see people sending you reports this Christmas in 2025 telling you the market had some opportunities here and there, these are brokers and realtors that are looking at these positive news because the Real Estate Association in the United States, their specialty is to spin everything in a positive way so they can sell some more. Oh, people died. That's okay. There is more procreation. People gotta die. Oh, there is war. War is good because now we're gonna win and we're gonna have more money and they're gonna print more money. You can tell them, listen, I'm dying. Dying is good now. Set it up in an irrevocable living trust. I'm like, what the heck is going on? The reality is the market is frozen. Ask anybody trying to sell properties. But what's gonna happen next is gonna be this big comeback. There will be some opportunities for those who have the money, and you have not just the money, you have the good judgment to come back in the market now and the skills. So let me tell you, you're right about being ultra selective. So number one, I'll give you some steps here. Be ultra selective. That means you as a developer pursue only infill, untitled and near entitled projects. Why? Because they're going to be ready to issue. It's called ready to issue. That means you're going to get it, sure, the terms, and you're going to start building. Okay? And if you're doing residential, what a great idea to have a lined up, proven end buyer, because you want at least end buyer demand in certain areas, like starter homes, small lots, duplexes, a lot that you can take, demolish the 3-plex or 4-plex and build the 6 units or 4 units. And when you build the 4 units, build them not like 4-unit apartment build them like townhouses, like condo. So you have the 6 or 8 units individually deeded. Why? Because you can sell them individually. Sell 3, pay off all your expenses, and keep 3 free and clear. There's nothing wrong with free and clear. Get a credit line and keep doing other deals. Okay, so number one, be ultra selective, ready to issue, untitled and near entitled properties infill. 2, avoid heavy lift. Don't go and try to do rezoning today. No long timelines, no speculative luxury at high end. It is not the same market we used to have. There may be some market for like San Francisco and Southern California. So you're in Southern California, there's always a market for luxury. But there is a hiccup in the market, a luxury drops 10%, you just lost $200,000, $250,000. We're not talking peanuts here. Okay, so avoid this. Go like the Walmart style, the critical mass of the market that will always move. Okay, and by the way, how do you find that? You can go to realtor.com. You can actually Google and see what's the median home Median home is half higher, half lower. Todd, let me finish and then I'll talk to you. So avoid these heavy lift of rezoning and stuff. Number 3, control the risk. Try to option the land. Do a joint venture with the landowner. Do a fee development and limit the cash exposure, so you can do like, I'm going to option and you're going to work with me to get approval so we can give you so much on the upside. A lot of sellers of land are stuck. They don't know. Nobody really knows the value of a land because it all depends what you're going to build on it and what the demand is. Okay, number 4, have what's called the CapEx discipline. CapEx discipline is how are you going to underwrite at today's pricing? Higher rates for construction, slower absorption, no rebound assumption. Is going to take time. I tell you, the market's going to come into a bonanza, but it's going to take a little time, which is perfect for you because you need time to build and to get your projects done. But you need to control the money, how much you're going to pay for everything, for the cost, and you need to manage that construction. You need to be daily on that site. Number 5, capital reality. Institutional money is not happening, a signed line. So focus on private investors. If you can get family office money, if you have the structure with real estate funds, you can approach family office. But I can tell you, a lot of individual investors want to get in projects, but they don't know how. They're busy in their jobs. You got to approach these people. And you being a developer, you can go with your background and experience and say, now I am set up like this, and I'll give you that, and I'll do this, and I'll do that. That's what's called the capital reality. You're not going to get banks too excited about projects like this unless they see that you have a lot of margins of safety in them. The team, you got to bring a team back and you got to stay lean. Okay, outsource the consultants instead of rebuilding with full teams, but talk to people, talk to the architect, the civil engineers, all the good people. People will get in on the projects and negotiate everything you do. And finally, number 7, alternative path. If deals don't pencil out, go some value add multifamily. There are plenty of deals like in Santa Monica and deals like this. So you can take them, expand them, improve them, and if all fails, just do some consulting to developers, assist other developers, and from there you can actually branch out again and come back strong. So don't quit development, just shrink the scope of work, shorten the timelines, and protect your downside, and you'll do very, very well on that next cycle.